Welcome to the Explainer. We constantly hear about these massive billion-dollar tech buyouts or flashy real estate deals, right? But underneath all that noise, there's this entire shadow economy of totally unglamorous blue-collar operations that are quietly generating immense wealth. Seriously, instead of writing code, these guys are making absolute bank just clearing out wet leaves. Today, we're tearing down a live business listing to see exactly how the numbers work. Okay, let's dive into this. $1.5 million. Yep, that is the massive sticker price attached to a relatively young, 3-year-old gutter contractor business down in Sarasota County, Florida. Building a company from absolute scratch and slapping a multi-million-dollar valuation on it in just 36 months, that's an incredible feat. But, as we know, you can never just take a sticker price at face value. I mean, just listen to the broker's highly polished marketing description. They call this a scalable Gulf Coast exterior services platform. It sounds incredibly sophisticated, doesn't it? Almost like you're acquiring a piece of high-end cloud-based software rather than, well, a fleet of trucks installing aluminum rain catchers. In this explainer, we're going to systematically tear down this listing to see if the solid financial foundation actually matches that impressive curb appeal. So, here's our due diligence checklist for today. First, we'll meet the gutter gold mine. Then, we'll look at operations and scalability. Third, we're crunching the numbers. And finally, evaluating the deal. All right, Section 1, meet the gutter gold mine. Let's look at the baseline stats. This is a 3-year-old relocatable S corporation running a standard Monday to Friday schedule. And currently, the owner is putting in about 45 hours a week in a management role. So what exactly is this team delivering? They've got a workforce of 2 full-time and 13 part-time employees handling seamless gutters, oversized water systems, and soffit and fascia installation. But here's the kicker, that third point, recurring maintenance programs. In the home services industry, sure, one-off installations are great for a quick cash injection, but it's that recurring maintenance that provides the consistent, predictable cash flow well beyond the initial job. And honestly, that's exactly what buyers are looking for. Moving on to Section 2, operations and scalability. Let's assess this so-called turnkey platform. If we contrast your standard mom-and-pop operation with what's being offered here, the difference is night and day. A traditional gutter business usually relies on manual tracking, sporadic word-of-mouth marketing, and literally a filing cabinet just stuffed with paper receipts. This business? It's a modern, tech-enabled machine. They've got a fully integrated CRM, digital sales systems, and standardized workflows. Because of that, they boast over 9,000 completed projects and hundreds of 5-star digital reviews. The takeaway here is that you aren't just buying ladders and trucks. You're buying a highly digitized engine that's completely ready to scale. Let's get to the good stuff. Section 3, crunching the numbers. Time to dive into the actual financial data. Let's look at their gross revenue journey. In 2023, the business generated a very healthy $1.29 million. But look at that middle year. There's this massive peak in 2024, surging all the way up to over $1.76 million. Then in 2025, revenues settled back down to $1.45 million. We need to dig a bit deeper into this because an up and down trend like this is a massive red flag, or at the very least, a giant flashing yellow light for any potential investor. I really want you to ponder this fluctuation for a second. What on earth caused that massive revenue spike in 2024? Was there a major hurricane that hit the Florida Gulf Coast, causing some sort of artificial, temporary boom in exterior repairs? Or maybe it was just a massive one-time commercial contract that's never going to be repeated. This is exactly the kind of critical inquiry a savvy buyer absolutely has to discuss with the seller during due diligence. You simply cannot base a multi-million-dollar valuation on an anomaly year. And this brilliantly illustrates why you always have to look deeper than just top-line sales. Let's walk through this heavy financial data, comparing that boom year of 2024 to 2025. Gross profit dropped from over $1 million down to about $872,000. But check out the expenses. While gross profit fell, expenses notably rose from around $476,000 to over $586,000. So because costs went up while revenues went down, the net profit absolutely cratered, dropping from over $612,000 in 2024 to just $285,000 in 2025. We're seeing some serious margin compression here, and finding out why is absolutely essential. All right, moving into our final phase. Section 4, evaluating the deal. Let's do the investment analysis. I want to bring this directly back to you. Put yourself in the shoes of an investor for a minute. You are holding a $1.5 million check in your hand. You've seen the shiny marketing, but you've also seen that slightly concerning shift in the 2025 profit margins. So, what are you actually buying? Well, to figure that out, we have to define a vital term, seller discretionary earnings, or SDE. Simply put, SDE is the total financial benefit a single, full-time owner-operator would get from a business on an annual basis. It factors in the net profit we just looked at, but it also adds back the owner's salary, interest, depreciation, and any personal benefits run through the company. When brokers value small home service businesses like this one, SDE is the primary true cash flow metric they rely on. For this specific gutter business, the 2025 discretionary earnings figure sits right at $411,229. Meaning, if you pay the $1.5 million asking price, you're essentially buying a cash flow stream of about $411,000 a year. That places the valuation at roughly a 3.6x multiple of earnings. However, it's really important to point out that this asking price includes $250,000 worth of furniture, fixtures, and equipment. So all those physical assets, the trucks, the gutter machines, the tools, they are all included free and clear in the deal, which definitely sweetens the pot. Finally, let's briefly summarize the remaining logistics and the fine print of the deal. Remember earlier when we said it was relocatable? The physical footprint is tiny. They lease a 500 square foot office for just $1,347 a month, and that lease doesn't even expire until December 2027. To protect your investment, the seller is offering a 35-mile non-compete clause for 3 years. Plus, they're going to stay on for 2 weeks of training to show you the ropes and, crucially, transition those all-important recurring maintenance clients over to you. To wrap things up, we've got the official broker contact sheet and the required legal disclosures for the listing. We've walked through the shiny exterior, dug into the fluctuating tax returns, and evaluated the true cash flow. And it leaves us with a really fascinating final thought to ponder. In a world totally obsessed with glamorous tech startups and massive real estate empires, might a highly systemized, remarkably unglamorous, everyday gutter cleaning business actually be the ultimate $1.5 million investment?